Wednesday, February 8th, 2023, Monaco 64, Home of Alternative Economics and Contrarian Views. Today, we're going to look at the Biden economic miracle, the reason behind this economic miracle, and we're going to dissect the data and really look at what's behind this miracle. Before I start, though, I'd like to say that we'll be doing some of the questions that you asked last week, the Q&A, at the end of the video after I do the market update. So with no further ado, let's get on to the Biden economic miracle. So, as most of you know, I'm not in the US. I'm in the UK, and even here in the UK, I don't follow the mainstream media that much. I don't follow politics that much. But sometimes you need to to follow things a little bit to see what's really going on. And I think this is really important to look at. And why do I say it's important to look at? To look at what's really happening in the US economy. But this applies to the whole world, especially the Western world, because what America does, we follow here in the UK and to some extent in Europe as well. So this morning I'm going through here, as I usually do when I get up. I turn on my computer and the Financial Times is reporting. Joe Biden warns China over threat to U.S. sovereignty in State of the Union address. President delivers defiant message to Beijing amid rising tensions and defense economic record at home. So that's another thing that I'm not going to cover too much here, the geopolitical situation. But suffice it to say, the Chinese central bank announced that it's added on 15 tons of gold back in January of this year. It reported what it added on in December and February. And why is that important? Well, it's very unusual. The Chinese usually don't announce things monthly. They usually take years to update their gold holdings. So I think they're sending America a message. And is it any wonder that things seem to be heating up geopolitically? But back to the economy. I've highlighted here the part that is important for us to look at. And this is what it says. In an energetic oration met with cheers from Democrats and boos from Republicans, Biden also set his economic plans with billions of dollars, well, I would say hundreds of billions of dollars in subsidies for domestic manufacturing, including semiconductors, were helping the U.S. win the economic competition. And many of you know I'm not partisan. I'm just looking what has been said here. How do I think it's going to work out when governments interfere in the private economy? Well, the Austrian School of Economics has an answer to that. It's called malinvestments. If the government has to be involved in subsidizing companies, it means those companies are not fit for purpose. Why would government need to help these companies? If they had such a good business plan, good prospects, the private sector would be pumping savings and money into those companies. So what you need to understand is that the Soviets tried that. and we saw what happened to the Soviet Union. It was an economy directed from the center, from Moscow, and then it collapsed, of course. It did take a while, but let's continue anyway. This is what Biden said. I will make no apologies that we are investing to make America strong, investing in American innovation in industries that will define the future, and that China's government is intent on dominating. So you've heard probably before 5-10 years ago that China is a communist country and that the government is involved in everything. So now America is following the Chinese path. It's getting involved. And notice how he talks about investing. Well, the way I look at investing is that if I'm able to have some excess money at the end of the month after all my costs, I'm able to save that money and maybe save a pretty good nest egg in a few months or a year. And then after doing a lot of due diligence and a lot of research, I might want to take that those savings and put it into an investment, into a business that I think has good prospects. But governments don't do that. Governments don't care because it's other people's money. They take your tax money, they borrow on the back of you, future generations, and they just give the money to the people who give them the most money so they get elected. So it's very corrupt, I would say. So this is not going to work. But let's continue anyway. Let's come to the interesting part here. We are investing in our alliances and working with our allies to protect our advanced technologies so they're not used against us. Modernizing our military to safeguard stability and deter aggression. So what allies are those? I don't know, because America doesn't have allies. They have pawns, right? Who destroyed the Nord Stream 2? Well, I think it was America. It was supposed to be German infrastructure. So let's continue. Domestically, Biden said he's building an economy where no one is left behind that will deliver tangible benefits for blue-collar America. 12 million jobs. This is the good one here. 12 million jobs were created under his watch over the past 2 years, he said. In a bounce back from the damage wrought by the coronavirus pandemic. My economic plan is about investing in places and people that have been forgotten, Biden said. Well, I think government does one thing well, and that's wage war, tax people, but not invest. and we've seen that. I mean, it's very clear. We saw that in the Soviet Union. We see it in Cuba. We see it in other countries that have tried communism or centralized planning, like the U.S. is trying now with this Inflation Reduction Act, which now the acronym for it is IRA, which is kind of ironic. So let's look at the reason behind this economic miracle. How did Biden create 12 million jobs, or the Biden administration? Well, I'm going to go to the Fed's website, St. Louis Fed website, Fred, and look at all employees, total non-farm employees. So before the pandemic, there were 152,371,000 employees, non-farm employees in the States. And then we had the lockdown, and that dropped to 130,430. What happened there? Well, they shut the economy. People lost their jobs. Even people on furlough, some were counted, some were not. So be as it may, that was the result of the lockdowns. And then when the economy reopened, of course, people went back to work. These weren't new jobs that were created. These were just people going back to work. And you could argue that by January 2021, President Trump had created 12 million new jobs, because we went from 130 million to 142 million. So you do the math, right? So that has continued, of course, which is normal, people going back to work. So now we're at 155 million. Yes, we have more employment since before the pandemic. We have about let's see, just over 2.5 million new jobs. So, but the 12 million Biden is talking about is just people going back to work after the lockdowns. And as you saw, President Trump, under the Trump administration, created 12 million new jobs. But the thing about the Biden administration that it took power in January 2021, so it can say we've created 12 million new jobs. And at the same time, in January 2021, they could have said that the Trump administration destroyed 10 million jobs, right? Which isn't really, it's true because they locked everything down. So there you go. That's how they created 12 million new jobs. Let's have a look at also labor force participation rate. This is the proportion, the percentage of the working public that is working. So I think that's a good number to look at. I've sourced it from the Federal Reserve Bank of St. Louis again. So if we look before the pandemic, 63.3% of people that could work were working. So right now, that number is 1% lower, and that's the reason as well why the unemployment rate is so low. Only the people that are looking for jobs are counted in the calculation for the unemployment rate. And why does the unemployment rate go down like this? Because I think a lot of people have given up, as you can see here, by the labor force participation rate. So we're going to look at the Biden economic miracle in terms of the budget deficit. I've spoken about this many times, that the calculation for GDP adds government spending. They like to call it now also government investment. They call it investment and spending. But what you need to know, if the government ran, let's say, a balanced budget, yeah, that would hurt GDP. If the government runs a deficit, that adds spending to the GDP equation and makes GDP look bigger. So the more deficit you run, the federal government, the more juiced up GDP will be. So if you look here, even under the Trump administration in 2019, the federal government was running an almost 5% deficit. In 2020-21, the government was running double-digit deficits, as you can see. And now, with the greatest economy ever, with 12 million jobs created, with unemployment at a 53-year low, the budget deficit is still 5.4%, which is huge, I would say, in a time when the economy is supposedly doing well. Can you imagine if we go into a recession, which I think we will very soon, what will happen? And of course, the debt doesn't stop, and that the deficit spending, that's reflected in increasing federal total public debt, as you can see here from this chart from the Federal Reserve again. And this is only till the end of 2022. Of course, now we are above 31 trillion. So what's my conclusion about the Biden economic miracle? Well, there's an old saying attributed to Benjamin Disraeli, former British Prime Minister, by Mark Twain. And the phrase goes like this: lies, damn lies, and statistics. That's what it's all about, the Biden economic miracle. And why won't you hear about this in the mainstream media? Well, because the mainstream media, of course, is pushing the Biden or globalist agenda. And they're pushing the fact that, the economy is doing great, is not in a recession, but they won't talk about what I just showed you. So why is it important for you to know about this deception, I would say? Well, because if you're a business person, if you're a saver, if you're an investor, I think it's good to know what's really going on, because if you believe in all that's being said by the government, by the central banks, by the mainstream economists, you could get hurt quite a bit. So that's why I do these videos, and that's why I think people need to be, in my opinion, cautious about what's going on in the economy. Things are not as good as they seem. And the other thing I would say, the misallocation or malinvestment of resources, which usually happens when government gets involved in the economy, is actually really bad for the economy. It actually creates, it creates more and more inflation. The best thing for an economy, I would say, is shrinking the size of government, getting government out of the private sector, and we're not seeing that. So let's go and check where the markets are this morning. It's 8:22 a.m. London time. So we've got spot gold at $1884.50. It's up about $11. The high's been 86, the low 1871. We've got spot silver up 1.5%, 22.50, up 34 cents. The Dow futures is down 83. NASDAQ 100 futures down 30 points. S&P is down 11. To the currencies, sterling is up about 0.5%. Just below 121. The euro is bouncing back a little bit as well. It's up 0.25% at 107.55. The dollar is down 0.2 versus the yen at 130.83. The dollar is up slightly versus the yuan at 678.53. Let's check the dollar versus the ruble. Yeah, dollar is continuing to move up, back up against the ruble here. It's up almost 4% at 71.80. Aussie dollar is up 1/3% at 69.85. The dollar is down 1/4% versus the Canadian dollar at 133.67. And the Kiwi dollar is up 1/4% at 63.39. To the general commodities, we got platinum up about $12. It's trading around $9.90. Platinum. WTI crude is up 2/3% at 77.75. Brent is up 0.5%, just below 84. High grade copper is up 2/3% at 4.12. To finish off, we'll quickly look at the bond market. We've got the US 10-year yield down 2 basis points at 3.65. Let's check the UK gilt yield curve. The 2-year is down about 2 basis points, just below 3.50. The 10-year is up 1 basis points at 3.33. And the 30-year is up 2 at 3.77. And now let's look at some of your questions from last week. And there weren't too many because last week I was in Switzerland and didn't make as many videos. First question, faith and confidence in the dollar could be lost from within. That's the video, that's from that video. And the question is from Chris Eustace. Might the vast accumulation of gold by wise nations present a situation whereby the word of the Fed, not to be believed, necessitating an actual audit of gold reserves to support its massive debt issuance? I think you mean of the Treasury, not the Fed, because it's the U.S. Treasury that holds that gold at Fort Knox and other depositories, and it's the U.S. Treasury that issues the debt. Yeah, that is always possible. That is always possible. People might want a real independent audit. It's possible. This is from the same video. It's from DD Prepper. Mario, have you seen reports from the Fed that the Fed coin is coming out in July or sooner? To be honest, I haven't, but I can say there's a lot of talk about CBDCs right now, even in the mainstream media and here in the UK as well. The Bank of England and the Treasury are looking into it. So I wouldn't be surprised, but I have to look into that. CBDCs go well beyond Orwell's dystopian 1984. Yeah, that was the interview I did with Torsten Polleit while I was in Switzerland. Torsten is an economist from Germany, a proponent of the Austrian school. So this looks like a long question from Barry Butler. We'll go through it though. Have you ever thought of touching on a video concerning foreign investment in football, specifically the Premier League and the OPEC nation involvement and what this means? Surely the West being bought out by vast swaths of foreign entities, including China, is a detriment to the UK. I know you're not a football fan, but monetary-wise, it would be interesting to gain an insight into this and the eventuality of what it is further to come. I'm sure OPEC nations are only here to get what they can now at present, and it won't last. In a time where Man U and Liverpool are both owned via American investments, are for sale, is interesting. Do they see it's a get out now whilst they can situation? All the while, Saudi and UAE are looking to further invest. Tottenham Football Club next, apparently. Yeah, I mean, I don't follow football anymore. I do like football, but the older you get, the less you're interested in all the sports, I would say. I like golf. But one thing I would say, we've only got ourselves to blame, not just in the UK, but in the US and other countries. And why is that? Well, because we've been running current account deficits for decades. And what are current account deficits? Well, it's when the country buys more from abroad than it sells. So we're living beyond our means. So we're running a deficit with other countries. So actually, this is just a recycling of all the pounds and dollars that they have back into our economy. We actually should be thankful that they're putting the money back here by buying these football clubs. And it's a reflection of how hollowed out our manufacturing and our real economy has become in the last decades. And a lot of it is to do with inflation because we're living beyond our means. So these foreigners, they need to recycle their pounds. They don't want to keep pounds in the bank here because you know what's happening to the value of the pound. So they buy football teams, businesses that do well here in the UK, and that's what it's all about. And the American investors as well, that's what it's all about. But now they're running out. And yes, the Saudis and the guys from the UAE, they've been exporting more than they import because of their oil wealth. That's what I see. That's how I see it. And but I do agree. There's a lot of money in sports. The Saudis are also like putting money into golf. So, question 4. Financial repression will dispossess the masses. That's the video from that video. And it's a question from Dave Johnson. Dave says, the fiat collapse can be seen by the S&P versus gold chart, which shows that without the stimulus injected from '07, the S&P would have continued to drop, but instead climbed back up. If we believe that it may be the end of the road for QE, then the S&P versus gold may drop back to 1980s level, question mark. Dave Johnson, I've always looked at the Dow gold ratio, and I guess it's the same, similar for the S&P. And I think eventually when there's a total reset of the and I don't mean just a currency reset, but a reset of the U.S. financial system from heavily, let's say, focused on paper assets into real things. The Dow to gold ratio will go back to 1-to-1. So yes, I think that will happen. When it will happen, I don't know, but I think we're getting closer, like you said. So I'm going to stop here. I'm going to leave the 2 other questions for tomorrow. So with that, I'm going to wish you all a very good day and take care. Bye.